Okay. See, I think we're just gonna start. Okay, so welcome everybody to another webinar by DigiShares. My name is Jonas and I'm today's host. This time we'll be focusing on real estate tokenization, liquidity, and secondary markets. And we have with us today a great list of industry leading experts who will help us navigate through these complex topics. But before we zoom in on today's program and the presenters, let us just cover the rules of engagement. So first of all, if you have a question for a specific speaker while he or she is on, please add that question to the Q&A. And please remember to specify who the question is for. So simply type in the name of the speaker followed by a question. That helps us a lot. And then after each presentation, if there's any time left, we can then take a few questions. If not, we'll try to save them for the panel. Yeah, and please also note that sometimes if our speakers have any time to spare, they'll enter the Q&A after their presentation to answer your questions. And if you have any general inquiries, feel free to use the chat where our moderators will see it ready to answer them. Also, if there are any technical issues during the webinar, such as a speaker being muted, a screen not being shared, etc., please notify us using the chat. We'll then do our best to take care of it. Okay, so having covered the rules of engagement, let us now briefly walk through today's program and who the presenters are. So first off, we have Klaus Goning. Klaus is the CEO of DigiShares and will be giving a tokenization industry status update and talk about the current traction of DigiShares. After Klaus, we have Ryan Zega, who's the Associate Director for Business Development and Capital Markets at tZERO. And he'll be speaking about real estate assets trading on the tZERO alternative trading system. After Ryan, we have Leanne Bassett, who's the Director of Business Development at Archax. And she'll be covering the digitally native global capital markets, both for the present and the future. After Leanne, we have Darius, who's the co-founder and chief strategy officer at ADDX. And he'll be sharing some real world use cases of digital assets in the real estate space. And after Darius, we have Kiero-Watson, who's the head of markets at Tokenise stock exchange. And he'll be covering the regulatory issues facing the tokenization industry. And then finally, after Simon, we have Kristaps, Cuders, co-founder and CEO of Coreestate. And he'll be presenting a Coreestate case study, specifically how they tokenized their first real estate and what the challenges are. So yeah, we have a really good program, which at the end, we'll have a fireside chat where today's presenters, or at least those who are able to join, will answer your questions. We already have a lot of really good questions from you guys, but if you have a question you'd like to ask the panel, please feel free to post it in the Q&A, and please also add panel followed by a question. And similarly, if you have, just to reiterate, if you have a question for a specific presenter, please write the name of the presenter followed by your specific question. Yeah. Okay, so yeah, that's today's program. And I would now like to present today's first speaker, Klaus Goning. Klaus has a PhD in computer science, specialized in AI, and has taken out 7 patents. He's a serial entrepreneur, having co-founded more than 5 companies so far. And for the last 5 years, he has been focused on blockchain and co-founded DigiShares 4 years ago. Klaus will now give us a tokenization industry status update and shed some light on the current traction of DigiShares. So Klaus, if you're there, the stage is yours.
I'm here. I'm here. Thank you very much. Great pleasure to host another webinar from our side. Of course, DigiShares is a player in the real estate in the tokenization industry, we provide a white label platform for tokenization of real estate, and we interact with many different partners and players, and in the overall industry and the ecosystem around security tokens. And our goal with these webinars is really to educate anyone that is coming into the space and motivate people to look at tokenization as a way to reach different goals, such as automation and digitization and modernization of your business, but certainly also liquidity, which is the topic today. First off, I have to apologize because we overlooked that the US switched to daylight savings time last weekend, and that caused us some issues with some of the speakers that had to adjust the schedule. So thanks a lot for being able to adjust. And we also unfortunately lost one speaker that hopefully we can get back next on the next webinar. And hopefully it did not cause too many problems for the participants today. Yeah, let's move forward. So the focus today is on liquidity and secondary trading. We often speak to clients and discuss sort of what are the benefits of tokenization, and it's sometimes said that the top 3 benefits of tokenization basically are liquidity, liquidity, and liquidity. There are other benefits, I would say, such as digitization and automation and so on. If you are sort of a paper-based analog business that are quick wins. DeFi lending, I think, is a huge benefit longer term, but not really realized so much yet. So right now, I think liquidity is really the holy grail of the space, and we have many clients coming to us that are basically only interested in liquidity. If they can't get that from tokenization, then they don't want to do it. And so I'm really proud that today we can present 4 of the top liquidity providers in the industry, all regulated security token exchanges, best of breed, I would say, in the 3 major regions of the world. We are partnered with all 4 of them and can act as a gateway to liquidity through our tokenization platform. So we have tZERO in the US, Archax in the European Union and the UK, ADDX in Singapore and Southeast Asia, and Tokenize in Barbados and London. So I'm really looking forward to hear their perspectives on the industry and the importance of liquidity and how they see the future for our industry. We work with all 4, and we actually have specific projects that we're working on, both with tZERO and Tokenize. One of the projects is a company called Market Space Capital, a real estate developer in Texas, US, that I think will be touched on later today in the tZERO presentation. We are also proud to present one of our white label partners today, Kristaps from Coreestate. We should have had 2 cases today, but one of them had to. Yeah, it didn't work with his schedule after we sort of messed up with the daylight savings time change, unfortunately. A couple of months ago, we had a webinar focused on regulation, which was actually a huge success, surprisingly to us. But regulation, of course, is a key element in you could say the rollout and the success and the viability of tokenization globally. There's a lot of countries where tokenization from a legal perspective is unclarified and uncertain, or even not possible at all. So the lawyers and the regulators are critical partners, critical players in this space, in order to make sure that we can actually operate and realize the projects and realize liquidity, for instance. So we've decided to focus the next webinar in April again on regulation, and this time with talks from legal partners in 5 other countries where we actually see quite good traction: Denmark, France, South Africa, Australia, and India. So that should also be quite interesting. From an industry perspective, I think that the industry is growing fast. We see significant demand, and actually it seems like there are too few providers in the market to satisfy the demand. We get a lot of inbound leads from clients across the world that are interested in trying out tokenization from different perspectives, both to be pioneers and to innovate and to try new ways to optimize their business, but primarily quite often to get to make their assets more liquid. We signed up, I think, 7 clients since the last webinar, and as normal, it's all over the world. So a couple in the US, one in the UK, one in the Netherlands, one in South Africa, one in India, one in Turks and Caicos. We are working on getting a crowdfunding license in the US, so we can provide our platform for rec crowdfunding type raises, and we are also working on getting a transfer agent license in the US, which makes it easier to collaborate with companies like tZERO, for instance. Other than that, I will give back the word to Jonas and wish everyone a good afternoon or morning or evening, depending on where they are today, and thank you very much.
Yeah, thank you, Klaus. So next speaker up is Ryan Zega. And Ryan is an Associate Director of Business Development and Capital Markets at tZERO, where he spearheads the firm's real estate initiatives. And Ryan has an extensive institutional real estate background, and prior to joining tZERO, Ryan was Director of Acquisitions and Business Development at Paramount Group, where he was tasked with acquisition, disposition, and debt origination across Paramount's Trophy and Class A office portfolio in New York, San Francisco, and Washington, D.C. Ryan was previously at Normandy Real Estate Partners, a vertically integrated real estate fund operator focused on value-add office product in the Northeast and Mid-Atlantic regions. Ryan began his real estate career as an investment analyst at PDIM Real Estate, and now he's at tZERO, and today he'll be speaking about real estate assets trading on the tZERO alternative trading system. So Ryan, if you're there, the scene is yours.
Introduction, and Klaus, thank you for having me. Practical use cases in the real estate industry. So as Klaus noted, we actually onboarded an asset, the spot at Myra Park, about a week ago, where DigiShares served as the tokenization provider, and we are providing the secondary liquidity. So I'll run through a couple of slides in my overview deck. Jonas, is the screen coming up for everyone?
Yeah, I think so.
Mentioned, I have a pretty traditional institutional commercial real estate background, acquisitions, asset management, and debt origination, mostly on U.S. office products. Not know about tZERO. We essentially operate a secondary trading platform. So we have the ability to tokenize private equity and then allow for secondary trading. Likewise, we have a number of partners similar to DigiShares that provide tokenization as a service, as well as a number of other service for mutual clients, such as MarketStates Capital. You could really think of us as the NASDAQ or New York Stock Exchange for private markets. Interestingly enough, last week we announced that the New York Stock Exchange's parent company, Intercontinental Exchange, actually led our latest strategic capital raise. And with that strategic capital raise, they actually brought over their Chief Strategy Officer, David Goon, as our Chief Executive Officer. So it's a very interesting update, not only for tZERO, but the digital security industry as a whole, where one of the largest traditional financial players has firmly planted its flag with tZERO and, has provided a lot of interest in the digital security space. So I think we'll have a number of interesting updates over the next couple of weeks. An overview of really how we provide secondary liquidity. In the US, we operate 2 SEC registered broker dealers. One is the trading venue itself, the tZERO ATS, which is an alternative trading system. And then we also have a retail broker dealer by the name of tZERO Markets. So the retail broker dealer is a very Charles Schwab or TD Ameritrade-like interface that allows users both in the US and internationally. We can actually accommodate about 42 jurisdictions on an unsolicited basis to go through their KYC and AML, fund the account, and then begin trading these digital securities that are present on the tZERO ATS. On two use cases that we have trading on the ATS currently. One is the spot at Myra Park. So the spot at Myra Park is a 250 unit active adult living housing development in Dallas, Texas. The sponsor there is MarketSpace Capital, who's the mutual client of both tZERO and DigiShares. So MarketSpace Capital is a roughly $480 million AUM private owner operator of value add and ground up development products, mainly in the Texas region, but they're pretty agnostic. So they identified an asset, the spot at Myra Park, whereby they did a Reg D 506C offering mostly over the past year and raised about $6.5 million of capital from a group of limited partners. MarketSpace Capital engaged DigiShares to provide the tokenization services, whereby DigiShares then tokenized that equity. We then onboarded that equity onto the tZERO ATS by of each of these individual LPs opening tZERO and actually representative of their equity. And then that asset commenced trading as of last week. So it's a super exciting process where we were able to take this ground up development, which is about 15% complete, token DigiShares, and then allow it to trade on our platform. So again, it's a super exciting time, whereby this is probably one of the first, if not the first, asset that's trading. Oh, Jonas, I'm sorry.
I was just saying your voice is we cannot hear you all the time. But yeah, just go ahead. I'll notify you if it happens again.
Feel free to interject. And then the other asset that we currently have trading on our platform is the St. Regis Aspen Resort. So with the St. Regis Aspen Resort, the operator there elevated returns. Well, they did that back in October of 2018, where they sold down a 19% equity interest in that property. They sold down that 19% equity interest to about 13 limited partners who were primarily based in Southeast Asia. We then engaged formally with elevated returns in 2020 to tokenize and then trade that asset. And by August 24th of 2020, we actually were able to tokenize the asset on a Tezos-based protocol, onboard the LPs, and then permit for secondary trading. So that's a real estate asset that's been trading for about 18 months or so now. It's been a really huge success where that's a trophy asset in Aspen, Colorado. So the St. Regis Aspen Resort's really a 4-star, based in a very prominent ski destination in the US, Aspen, Colorado. It's a fantastic asset with a number of great bars, restaurants, and really a high level of really certain asset. And when we take a step back and look at the real estate for assets, which happen to be ground up developments, and or hospitality assets, but we're seeing a wide array of different product types. So everything from very, very conservative agriculture products, so triple net lease, farmland product, triple net lease, retail products, office products, all the way to stuff that is a bit more, a bit more risky, right? So you think about value add office plays, ground up developments, other types of repositioning that's also in our pipeline. And these assets are being brought to us by partners such as DigiShares, as well as direct interaction with private owner operators, fund operators, and institutional owners that are looking to take individual assets, portfolios, funds, non-traded REITs, tokenize the equity and enable secondary trading. Likewise, some of these groups are actually looking to do capital raises and identify a secondary trading platform, whether it's tZERO or any of the other options that are out there for secondary trading. So it's a very interesting dynamic that we're seeing. Smaller private owner operators are looking to be innovative and at the forefront of this, capital markets technology, which we like to call capital markets 2.0, and then a lot of traditional players, traditional larger players, whether they're multi-billion-dollar privately owned owner operators, or even some of the top 20 global private equity real estate firms are looking to identify a particular asset, whether it's an individual property, fund, portfolio, REIT, execute this strategy either across all of the equity or a subset of the equity, and then enable secondary liquidity on one of any of the venues.
Okay, was that it, Ryan?
Two practical use cases. In our future pipeline, we have a number of other private companies that are coming on board. So we identified another asset which should be onboarded within the next month or so. That's XY Labs. So it's a private company that does geolocation, software. So they did a Regulation A+ raise back in 2018, where they raised about $22 million from 24,000 investors. So that'll be an asset that's tokenized and then onboarded onto our platform. And then we have a wide array of other funds, real estate assets, and private companies that are deeper in our pipeline. So it's a very exciting time where, we're bringing on a number of really high quality institutional assets. And then I think that, interconnectivity with the Intercontinental Exchange will be a huge driver, not only for tZERO, but the industry. A couple of minutes left and started a bit early. If there's any, questions, we could certainly do that or go over to the next speaker. Totally up to you, Jonas and Klaus.
Absolutely. I think we'll just take a couple of questions. Thank you very much, Ryan. It was really insightful. So we have a couple here in the Q&A. So first and foremost, we have Walid asking if tZERO also issued tokens, and what is the main difference between DigiShares and tZERO, and how is it providing extra secondary trading services other than what DigiShares is offering right now?
And so, so tZERO provides the tokenization service as well. And then I know that Klaus and the rest of DigiShares provides tokenization as well as some other, bespoke services. So we work, very closely, and Market Space Capital is a very good example of an asset and really an owner operator that's utilizing Market Space as well as some of those other bespoke services, and then bringing over that token to tZERO for the secondary trading side. So at tZERO, we operate to have that user interface, that retail broker dealer by the name of tZERO Markets, where an individual can open an account, go through the KYC and AML process, fund the account, and then begin trading these various digital securities. Likewise, whenever we onboard an issuer, we onboard their existing cap table. So with Market Space Capital, we onboarded, their limited partners who were fully seasoned per rules regarding seasoning, allowed them to open accounts, preceded those accounts, and allowed them to trade. So really, our secondary trading platform is that registered ATS secondary trading venue where the users on that platform have either opened tZERO Markets account or can potentially come through third-party broker-dealer subscribers. And I know that DigiShares has some, bespoke, I think, peer-to-peer trading, which, hasn't been enabled for this particular asset, but, really that's kind of the difference between our two platforms, where we work very, collaboratively on a number of mutual clients.
Thank you. Okay, then we have another one from Cameron asking, what was the minimum deposit for the 506C offering for that 6 million raise? And did the limited partners have to wait for a certain hold period before they received their investment?
question. So market-based capital mainly raises capital through mostly accredited investors who go through their portal for a wide variety of different value add and ground up development deals. So their minimum, I believe it's, most investors are probably coming into a minimum of 25,000 to 75,000 at the primary side. And just to clarify, we at tZERO are solely involved in the secondary trading of these assets and do not partake in primary raises. We who does the primary raise. So a lot of our issuers are capital markets arms where they're doing their own capital raises, or they might be engaging with a private placement agent, investment bank, or issuance portal to do the primary raise. So, primary raise kind of differs asset by asset. For market-based capital, the spot at Myra Park, I believe most investors were, in that 25,000 plus minimum range. When the asset was onboarded, we actually onboarded those investors so that each funded $1 of their initially funded equity. So there was this element of fractionalization that took place with the spot at Myra Park. And we did a very similar exercise with the St. Regis Aspen Resort. And that's really the beauty of tokenization as well, where now your slug of equity isn't necessarily just one $25,000, $50,000, or $75,000 chunk. Essentially, you have the ability to trade post interest. And then with the spot at Myra Park, only a portion of their cap table was actually fully seasoned when we commenced trading. So those individuals trading per Rule 144, trading amongst both non-accredited and accredited investors after 1 year of seasoning. And about half of the cap table will be seasoned couple of months.
Great, thank you so much. And I think we can do one last question. So Alexander is asking, can this tokenization be done with small residential apartments or a minimum value number units, or is a minimum value or number of units needed?
We're generally working with issuers who are looking to float $5 million plus of equity. So, we're dealing with some smaller owner operators that might be in that $3 to $4 million of float size. And then some of our larger institutional owners are looking to take products that may be as large as $500 million of equity float. So that's our broad range. And then we're working with specific use cases for more bespoke trading, where they may be taking individual assets, tokenizing them, and allowing for trading. So I would say generally, $5 million plus of equity float size, but it's a constantly evolving platform where we are evaluating assets that are smaller than that $5 million of float size.
Great, thank you. Okay, so I think we are out of time, but Ryan, if you have any time left, there are lots of questions in the Q&A, so feel free to drop in there and answer them if you have time for it, of course.
Just follow up with an email, but thank you for having me on, and look forward to hearing the rest of the presentations and then the fireside chat at the end.
Absolutely, thank you so much, Ryan. Okay, then it's time for our next presenter, Leanne Bassett, who is the Director of Business Director of Business Development at Archax. And Leanne has over 20 years of experience in capital markets globally in both middle office and front office roles. And over her career, she has worked for leading technology vendors, exchanges, and brokerages, including the New York Stock Exchange, TMX, TD Securities, and ICAP. Before joining Archax 3 years ago, Leanne consulted with disruptive fintech startups, focusing on capital markets solutions. And now today, Leanne will speak about digitally native global capital markets for both the present and the future. So Leanne, please take the stage.
Great, thank you. Good afternoon, good morning, and good evening to everybody on the call, and thank you very much for DigiShares for having me on the webinar today. So I, as you have heard, I'm going to be doing a presentation on global digitally native capital markets today and tomorrow. We are a regulated exchange, much like tZERO. We have a lot of the same product offerings. Throughout my presentation, I will touch on exactly what Archax is doing at a very high level, and of course, after the presentation and today, if anyone wants to have a further conversation, more than happy to have that to get into more of the meat. Also, I have quite a few slides that I've nicked from lots of other presentations. I speak for hours on this topic. So please don't get too caught up in the detail of the slides because again, I have a lot of these in our business overview deck. And again, more than happy to have a conversation with anyone who wishes to. But again, really focusing on where we are today and where we're going tomorrow on really globalizing digital securities and digital assets from a digitally native point of view. So I guess the first thing I wanted to touch upon is what the challenges are today. So for global capital markets to become digitally native, hurdles do exist. As we all know, hurdles are meant to be jumped over and cleared, and all of us here today and our respective teams are working tirelessly to do that. So a few of the top hurdles that we see today that we are trying to overcome are as follows. The first is liquidity, so getting institutional participation and market makers to provide markets. It's not only getting these participants to understand how these new digitally native markets will benefit them, but also making them aware of some of the infrastructure changes that have to be made. The next challenge we see is regulation. I think that's been a lot of the presenters so far today have mentioned that. It's been topic of other conversations, webinars. So it's a very key hurdle and challenge that we all are facing. The next one is interoperability. So not only between blockchain protocols, but between exchanges globally. And then the last one I wanted to touch on today is just that the traditional markets and how they need to be evolved and the ease of access for those markets. So the first hurdle I talked about is institutional adoption. And it's the first hurdle that, well, there are many hurdles, as I said, but one of the ones that I wanted to talk about today. So every day there are news releases, as you can see here as highlights, specifically relating to institutional adoption of digitally native opportunities. For example, I think it was yesterday, State Street came out quite publicly how they are partnering with Copper. But every day we see more and more. 3 years ago, as mentioned, I joined, and it's just becoming more and more institutional. And as mentioned in the introduction to myself, I've worked with a lot of disruptive companies and other, when institutions are looking at other disruptive technologies, such as the public cloud, they've been slower to adopt. But in the end, they get there, like they did with the public cloud. And we're seeing that with increased education, global partnerships like the ones around the table today, and that market participants and experts are behind all of these changes, we are getting to a point where institutions are coming on board and are becoming very interested. I'm just going to hide, hide some of the screen here. Okay, great. So the next challenge or hurdle that I mentioned is the regulatory arena. So understanding regulations in different jurisdictions is important for pushing a global marketplace forward. And it's a very complex undertaking, as been alluded. There are different regulations to consider, not only in different jurisdictions, but some jurisdictions, for example, have different rules for solicitation, reverse solicitation into the UK market for both primary and secondary markets, as well as custody. So, and with Brexit for us here in the UK, this has added a lot more countries to the analysis that we have to do. We also know that the US has specific challenges to deal with in terms of regulation. So Archax has an established unique FCA regulatory stack with digital securities permissions. And we have our foreign operator license permissions pending in Australia, Singapore, Hong Kong, and a broker-dealer license in the US. And we'll likely look to get a separate foreign operator permission in the EU because equivalency between the regulations of the various countries has been slow. So more on our Archax particular regulations in a bit. So the next hurdle I mentioned was interoperability. So one of our subsidiaries here at Archax, Montes Digital, is building a digitally native blockchain-based post-trade infrastructure to allow security tokens to realize their full potential. Many tokenized assets are regulated assets, and that's really what I'm talking about today. And because of this, they fall under regulation. And one in our region in particular is the European Union Central Securities Depository Regulation, which applies, as I mentioned, in this region. And basically, this regulation mandates that all digital securities be maintained in a central securities depository if the issuance is being emitted on the market for secondary trading. However, all existing central securities depositories are not blockchain based, and so the full potentials of tokenization, such as recording ownership on chain or tokens being freely transferable between wallets, cannot currently be realized once they're on a secondary market. So Montes is building out the technology required for this, and the DLT post-trade market infrastructure is designed to be blockchain agnostic and will be available for exchanges and market participants globally, and that will help with this interoperability between exchanges for sure. So the next hurdle I talked about is ecosystem development. So I'm going to just, this slide is dynamic, so bear with me. Typically markets trade securities up to 9 hours a day, 5 days a week, and they tend to list securities from domestic issuers. And post-trade activities are slow and inefficient and take days, involving a host of counterparties. So if you can see me building out this, the number of counterparties and intermediaries that are involved to settle a trade is extraordinary. So if one trade takes place, there's multiple versions recorded and prevent the trade oftentimes from being settled. So this is very time consuming and very costly and inefficient. And also the reality is that the market today is fully integrated into the existing financial infrastructure and trading workflow. So order management systems, execution management systems, and most large brokers are connected into that world. And I'll just give you the fantastic visual of the things that happen when a trade happens and everybody that's involved. So this is, of course, one of the hurdles that we're seeing. So now a little bit about Archax and how we fit into the current and future ecosystem before looking at some other disruptive examples, such as corporate actions, fund management, and democratization of the markets. So as you can see, helping to solve the ease of entry, what Archax has done, our current regulatory FCA stack includes a brokerage, an MTF exchange, which is similar to an ATS in the US, and custody permissions. And this allows us to offer a suite of products for both issuers and participants. So if you can see from the slide, an issuer can come on, they can raise money through our brokers to do a capital raise. We can actually tokenize those securities. So equity debt units are, I guess, the traditional security tokens that we can tokenize and raise money for, but there are also a slew of other securities deemed, or assets deemed securities in our regulatory regime. We have a matching engine. So we're using technology that exists in the current world. So it's a central limit order book, whereby if the issuer wants a secondary market on a central limit order book, they can graduate to that secondary liquidity, but they don't have to. They can just stay, raise money, raise Series A, B, C via a token, and we can custody that. If you're a participant and want to be on the exchange, we have professionals and institutions that will be members of the exchange. They can onboard through the portal, do the extensive KYC AML. They can have a desktop app to do their trading transactions. We have an OMS that allow for APIs to connect into traditional platforms. We have a smart order router. We have market data plants, all the regulatory checks. And then, of course, I talked about a matching engine that sits outside of all these as a separate entity, as an MTF. And I guess what differentiates us is offering a digital custody along with the exchange, which a custody doesn't typically sit with an exchange. So what that does is it allows us to have instant settlement and allows us to create an easier path for international issuers in the UK. And again, there's lots of detail around that can be discussed with issuers in due course. So this is more of a visual depiction to show how our ecosystem works together. So the website, the online portal, the ACE client, and then we have the custody, we have the order management system, we have primary markets, and then of course connecting into the exchanges. And I say exchanges because although today I'm focused on the regulated exchange that we offer, we will offer an unregulated crypto market as well, which our whole ecosystem will connect into. So when I talked about the ecosystem before and the development that's required to really move this forward, the next step of change we see really to realize the efficiencies is in the post-trade space. So we really need all players in the ecosystem to adapt their current workflows. As mentioned, the issuance of a security generally relies on a central securities depository, and although we probably don't need it because I said we settle internally, we can't change regulation. Also, we can't change regulation today, I should add. We are tirelessly trying to change regulation. The participants that will be on our digital exchange are usually regulated entities and sophisticated, so they will likely still want to maintain a segregated custodian, and they want to be connecting to their familiar technology. So whilst the initial setup looks like the others, there's various benefits that can be realized using blockchain technology, which removes friction from the ecosystem. So we still have all of these, not all of them, but we still have many intermediaries. But the key benefit that blockchain can bring is to provide a single trusted source of post-trade truth that can be shared by all parties instantaneously who are running a blockchain node. As you can see, these blue bubbles are blockchain nodes, and the information is disseminated all out at the same time, and reconciliations can take place in real time versus that other chart where everything was crossed over and trades fail. So as I talked about further disruption, corporate actions is a good one we like to talk. On the face of it, corporate actions should be fairly straightforward. The issue is that our financial system still has a number of counterparties, as I mentioned, and those counterparties introduce layers of complexity. Many people have started to look at blockchain as a solution to this problem in a world where ultimately the beneficial owner has a segregated blockchain account. Issuances such as shares can be made directly into these holders' wallets at the exact point of time. Furthermore, we can see as cash takes a more digital form, cash dividends will also have the ability to be directly paid to holders. So if you just look at the sort of the dynamic, you get the voting in the traditional way, the voting, and then at the bottom here, the voting and the blockchain are where we're aiming to get to. And then of course, dividends in the traditional way, lots of arrows, lots of intermediaries, and then the dividends in the blockchain makes it much more simplistic. So the next disruption is in funds that I wanted to highlight. There's a lot around funds that I could talk about, and I know that there's been some questions in the sort of seminar around funds, and more than happy to have a more in-depth conversation because we really see that this is a massive opportunity for funds to be in a tokenized form. So creating a fund that can be traded on a secondary market like a tokenized fund can eliminate lots of frustrations. If a fund can be traded rather than redeemed, investors are able to have access to their funds if they no longer wish to be exposed to a fund. This also gives the investment manager a permanent source of capital. If an investment manager raised 100 million, they would continue to run that amount as long as liquidity could be provided on the secondary market. And of course, to keep the markets efficient, then fund managers will still need to produce NAV. So I guess it's just kind of, again, a dynamic slide of the old way of doing things in blue, and then of course, making much more simplistic, having a secondary market with sitting in between the investors and the fund manager. So the last part that we can see that really is helping push truly digitally native markets into the future is there's a lot of discussion around democratization and the way that digital securities in the digital security space. The way that we think about capital markets up until now has really been open. It's only been really open to a limited number of parties. We believe all issuers globally, including SMEs, should access capital markets for capital formation. And similarly, investors should be able to access all investment opportunities. So if you take this graph, if you're looking at illiquid, in the illiquid world, investors usually go straight to the issuer. They buy the assets. Of course, if the investor wants out of those positions, they have to do it OTC or find somebody to take on their the asset from them. And so it's just not traded. It's not traded on a secondary market, but we're opening up secondary markets with tokenization for these illiquid private companies, which allow for this liquidity and make things much easier. Oops. So if you're investing in a semi-liquid asset like a hedge fund, again, like we just spoke about, if you want to redeem, you'd have to submit a remit in line with the underlying asset manager redemption cycle. And if it's liquid, you can still trade it on a market, but there's an additional layer of fees that we see. And theoretically, investors have access to different markets. There are lots of intermediaries still involved, and the whole process tends to be inefficient. So where investors are able to access a public secondary market for all asset classes everywhere and invest in any of the opportunities that are listed. Sometimes an investor will still have to go through a broker because they're trading in a different jurisdiction, but this ultimately brings more cost. But what we'd like to be able to see is the following. So cutting out a lot of intermediaries, opening up the market to illiquid, semi-liquid and liquid, and having not as much friction in between the access and the secondary markets. So if we couple this democratization with the previous slide with the aggregation of all the different market segments that I've got highlighted here, so primary markets, secondary markets, custody, brokerage, and all the sub segments, as well as accomplishing interoperability between protocols and exchanges globally, and having all the key players and participants running nodes for post-trade efficiencies, we're really going to have the makings of a truly global, digitally native, democratized capital marketplace. So I know that was a lot, and there was slides that probably you couldn't catch up with, but again, happy to share those separately. So thank you very much.
Thank you so much, Leanne. That was really good, really informative. And unfortunately, we don't have time for any questions, but assume you'll be there in the fireside chat. Yeah. So yeah, if you have any questions, just you can ask them there. But yeah, once again, thank you so much. And let's now turn to our next speaker, Darius Liu, who's the co-founder and chief strategy officer at ADDX. Darius has over 15 years of experience in the public and private sectors. As a co-founder and chief strategy officer at ADDX, Darius was instrumental in building ADDX from its early stages to the regulated financial institution it is today. Darius oversees day-to-day operations of the company, including commercial growth, investor and issuer recruitment and onboarding. Prior to joining ADDX, Darius held various roles at GIC and was most recently vice president of total portfolio strategy in the economics and investment strategy department. Darius has also served in the Singapore government, including the Singapore's Ministry of Defense and the Investment and Reserves Department of Singapore's Ministry of Finance. And now Darius will introduce us to some real-world use cases of digital assets in the real estate space. So Darius, the scene is yours.
Thank you, Jonas, and good morning, good evening, good afternoon, wherever in the world you are. My name is Darius. I'm the co-founder and chief strategy officer of ADDX. and that's how we pronounce it over here. My presentation today is entitled Real World Use Cases of Digital Assets in the Real Estate Space. Now, I'll be the first to set the stage that ADDX is a multi-asset platform. All right, so all the use cases that you see that are applicable to real estate, which I will introduce to you, are likewise applicable to funds, bonds, equities, and structured products, and all of which we have executed in a commercial manner on the platform. And the keyword here, and I would like to emphasize in my presentation, is real world, right? The future is here. It's actually happening, and the action is already happening on ADDX and on other platforms around the world. So this tokenization, digitization of securities is a real thing. It's happening, and we all should get onto the bandwagon. So without further ado, I'll dive right in. Now, let's take a step back, right? The issues that we see in today's private markets, we all know that there's a huge opportunity in the private markets in terms of capital raising, in terms of one's own portfolio allocation. There's a lot of promise there for outsized returns and alpha, but the access to these assets is severely limited, right? To the institutionals, to the sovereign wealth funds, pension funds, ultra high net worth, due to the three things that I've listed here: high minimum entry size, limited access outside of private banks and direct GP access, as well as illiquidity. So because of these, we will not get access and not be able to allocate in the same way that the likes of, for example, my former shop GIC or pension funds or ultra high net worth allocate, right? And to generate more robust returns over the long term. Now, there are various barriers to invest in private markets from an individual perspective. As we all know, there's unequal access on both sides, right? From an issuer side as well as from an investor side. Now, if you look at number one, as I've labeled there, from an issuer's perspective, you have, publicly listed big companies that have a long operating history and have no problems gaining access to capital on the capital markets. But for everybody else, of course, it sort of presents a bit of more of a challenge. And on the investor side, like I mentioned, ultra high net worth pension funds, sovereign wealth funds, institutions, no problem, right? In the private markets. But for the rest of us, including the accredited investors in the room, we generally have the same kind of access as the moms and pops, i.e. none, right? And the reason for this is the market infrastructure is just not set up to do this, like the speakers before me have mentioned as well. And even if you can, sort of dip your toes into the private markets, you'll soon be faced with low transparency, a lot of intermediaries and a multi-fragmented sort of arena, as well as almost non-existent secondary trading opportunities. Now, digital securities to the rescue, right? The next wave of innovation in capital markets is digital. And digital securities, as we understand them in the Singapore regulated context, are basically securities in, as we understand them, stocks, bonds, units in a collective investment scheme, structured products, but they take the form of a digital token, right? Which in technical language is a smart contract deployed on the blockchain. But at the heart of it, a security is basically an instrument that represents a bundle of rights and obligations that give you a promise of a certain return for taking a certain amount of risk, right? That's basically what securities is. And the bundle of rights and obligations can exist in various formats, but it's the same bundle of rights and obligations. And that's exactly what digital securities is, right? You have 100 years ago paper certs, and then we move on to book entries, and this is securitization 3.0 in terms of, in the form of the smart contract deployed on the blockchain. Same bundle of rights and obligations, but what that brings to us, because of the fact that it exists in this format, is as follows: fractionalization, fractional ownership. I think Leanne has touched on that, and the benefits are there too. Automation of things like payments and distributions and post-trade actions and asset servicing, all that translates to productivity and cost savings, which ultimately translates to lower costs and lower fees, right? Instantaneous settlement, no lockups, because traditionally, for example, the PE fund may have a 5-year lockup, 7-year lockup. On the secondary market that, for example, ADDX operates, all these security tokens representing the underlying fund will have no lockup and is instantly tradable. And of course, operational costs of issuance, custody, and trading are low because the smart contract takes care of a lot of the manual processes that we see in the market today. So digital securities is here to stay. It's the next wave of capital market innovation, and ADDX is proud to be at the forefront of that. We are the first and only commercially viable platform in Asia that's doing this. And we are unique in the sense that we have 3 licenses representing the entire span of a life cycle of an investment product, right? So if you think of an investment product, any product, for a bond, funds, a unit in a collective investment scheme, shares in the company, it's first it has to be created and it has to be distributed, right? So that's primary issuance. And then whoever buys that will have to keep it somewhere, that's custody. And at some point, the investors who invested want to trade out of it or at a position that's secondary trading. And ADDX has licenses that cover all 3 of them. And we have built an integrated platform that covers all 3. So on one single one-stop shop, issuers and investors can avail themselves to primary issuances, custody services, as well as secondary market. Okay, so that's in a way what makes us a little bit unique, not just in Asia, but I would venture, I guess, we are unique worldwide as well. Regulated by in Singapore by the MAS, Monetary Authority of Singapore, since February of 2020. So we've been in operation for 2 years now. Like I mentioned, 2 key value propositions: fractional ownership and liquidity. And what that does is that it takes care of that concentration risk and liquidity risk, and therefore allows more accredited investors, not just the ultra high net worth, to be able to participate and allocate to private markets. And the reason for that is because it changes the role of private market assets in a portfolio, right? If you think about private market assets in today's sort of context, you immediately think of something that's very high risk, high return. You immediately think of something that's super long term with a very long lockup, you can't get out of it. And it's risky because it has a long tenor, it has a non-secondary trading, a non-secondary secondary market, high entry ticket sizes, and of course, potentially volatile underlying assets, right? So that's the current state of the world. But with digital securities on platforms such as ADDX, by virtue of the fact that we allow for fractional ownership, by virtue of the fact that we allow for secondary trading, it solves for a lot of the risk factors. And suddenly you realize that private market assets like hedge funds, private credit funds, private bonds, private equity shares in the company, they suddenly can take the role of, for example, risk management or diversification in a portfolio of any size, right? So that sort of turns the role of portfolio construction on its head when it comes to private markets. Now, I used to run portfolio construction for GIC, and that's how we thought about it for a portfolio like GIC. And then you ask yourself the question, why can't I, as an accredited investor, allocate like GIC, right? Before ADDX and these other digitized securities platforms, the answer is because you can't, right? You can't get access to it. The market infrastructure doesn't allow it. But with ADDX, now you can. So let's get real, right? Commercial use cases that are live on ADDX. Now, it all sounds very good, tokenization, digitization, everything, but it's no good to anyone if you can't make money out of it. So let's get real, right? What are the commercial live use cases? Now, on ADDX, we have over 25, 27, sometimes I lose count of how many products because we sort of push out products and issuances so quickly on our platform. But some of the names that you see here would be familiar to people who are in the business. For example, Partners Group, right? One of the biggest games in town when it comes to private equity managers. They have listed their global value CCAF semi-liquid product on ADDX. Open-ended fund, you can get in and out, redeem directly to a manager in bite sizes as low as $10,000, whereas previously, minimum entry size, if you're lucky, $250,000 US, right? Just an example. We have, real estate, like for example, InvestCorp, right? We have worked with them on 2 products. One's a multifamily residential, and we had just launched their American real industrials portfolio. We have China VC, We have quant funds in the likes of Icon, which is a feeder into Quantich, one of the top names out of Southeast Asia, and so on and so forth. Temasek linked names like Astrea and Mapletree are on the cards as well, Seatown as well. And Seatown is an interesting one. Before ADDX, their minimum entry size was anywhere between 3 to 5 million US dollars. We have taken that down to 20,000. Let's just think about that for a minute. So suddenly you have a private credit fund that you can allocate and you can diversify across private market assets. And this is real, this is live today on ADDX. Now I just want to get into a little bit about the different structures of how we do this, right? Because there's a lot of technological innovation that goes on behind bringing tokenization and digitized securities to life. But what people may not always appreciate is that the innovation also takes the form of legal structure innovation, operational innovation, and compliance innovation. And that is something that ADDX, the team at ADDX is proud to have done very, very well. And we have been able to execute deals like this in various shapes and sizes because of the fact that we have been able to execute in various legal structures. And these are just the name to just sort of run through a few examples of what we have done, right? So the first type of structure that we have is pretty simple, SPV wrapper, right? So any underlying asset, we take an SPV, we wrap it around there, and then we take the SPV itself. In this case, we call it Prometheus 1. It issues tokens that are backed by the underlying asset, right? Simple SPV structure. I think we should all be familiar with that. Now, number two, okay, so this is an issuance timeline, just to give you a sense of how quickly we can bring an issuance to market compared to, for example, a traditional bond or fund fundraise or equity IPO. Okay. Now, structure number two, and this is something we have executed for open-ended funds. We've executed that for closed-ended funds as well as other types of asset classes as well. This is what we call hybrid digital securities. There is still an underlying asset to be tokenized, but in this case, ADDX ourselves plays the role of the distributor. Right? We get into a distribution agreement with, in this case, the fund manager, and we issue tokens back to back with the LP stake that ADDX takes on, right? So the fund manager sees ADDX as just another one of our LPs, and ADDX issues tokens as a distributor back to back to the investors, and then we do all the subscription redemptions, all that back office stuff, and the investors will just have to log onto the app or the web platform, press subscribe, redeem, trade, and everything happens via ADDX on the back end. So that is what we call hybrid digital securities, and we have executed on this for open-ended funds, closed-ended funds, and other types of asset classes as well. But we want to get to this structure, which, as Leanne mentioned, yes.
Yeah, sorry, just if you could wrap it up within 1 minute or so, that'd be great.
That's right.
Yeah.
Okay. Yeah. Digital native, we have executed on this as well, and this is what Leanne was talking about earlier on. Fully no underlying asset, and we have done this comprehensively on ADDX as well. Challenges and opportunities is no different from what Leanne has mentioned, and we are obviously in contact with the regulators all the time for clarity in terms of things like tax treatments, operational support, and so on. And we've definitely come a long way. Now, the last slide is really, an invitation for everyone on this webinar, and it's exclusive sort of token of appreciation for attending this, to open an ADDX account and give it a go. And if only here, if you scan the QR code, and I'm going to post the link in the chat as well, you get $250 US in your ADDX account to start once you complete your KYC and get accredited as an accredited investor on ADDX. So we're open to everyone except US persons. I'm sorry about that, but everybody else across the world, we are welcome to join the ADDX family from here. So I'll leave it as that. Jonas, I'm sorry I've run over a couple of minutes, but thank you everyone for listening to this presentation.
Thank you so much, Darius.
Thank you.
Really good presentation and very informative. Unfortunately, we don't have time for questions right now, but I'm sure you can write Darius afterwards if you have any questions. Okay, yeah, then next speaker is Simon Kiero-Watson. Simon is the head of markets at Tokenize. He's a highly experienced small cap market specialist and has previously run an international stock exchange. As a corporate financier, Simon has secured listings on securities and various exchanges. And as a head of markets at Tokenize, he's responsible for overseeing and delivering the stock market solution and the blockchain-enabled central securities depository, which will arrange for the clearing and settlement of trades on the exchange. Now, Simon will talk about the regulatory issues facing the tokenization industry. So, yeah, see if you could stop the video, Darius, and Simon, if you could join the stage.
Yep, sure. Can you hear me all okay?
Yeah, yeah.
Right, well, good afternoon, good evening, or good morning, depending on where you are in the world. My name's Simon Kiero-Watson. I'm the head of markets at the Tokenized Stock Exchange. Today, I'd like to talk to you about basically the regulatory issues facing blockchain, tokenization, crypto industries, and why it's so important that regulators, we understand how regulators view the industry and what are the implications of this. And this is fundamental to who we are and what we're doing. I have a wide range of knowledge and experience that's been garnered through working in the banking industry, corporate finance, running stock exchange. I've also worked in the property industry, as well as being involved in blockchain and cryptocurrency startups. So I believe I'm sort of reasonably well positioned to talk on the subject. If we start, if I may sort of indulge with talking about utility or cryptocurrencies, tokens that are widely regarded as currencies, not securities, and as such, they're not regulated investments. That said, regulators, being regulators, would dearly love to regulate these investments, but have, as yet have not done so. But they have issued a significant number of warnings to investors about being involved in cryptocurrency investments. And one of the main reasons for this is that as an investment, there is no underlying asset, revenue stream, GDP, or economic indicators as to what drives the price up or down with a cryptocurrency, other than just demand for the tokens, which is very odd when there are no underlying sort of economic factors behind it. So indeed, recently, the FCA last week in the UK published a list of approximately 200 companies that have been offering ATMs or ATSs, alternative trading markets or services, exchange services in cryptocurrencies within the UK, and the FCA are forcing them to either shut down their operations or face FCA enforcement. So they're clearly stepping into what they feel is something that should be a regulated environment. But beyond that, one of the things that the FCA have also said that they're looking at doing and have published a consultation paper recently is that they are looking at the promotion of cryptocurrencies, how this is done, and how this will now fall under, or what they want it to do is fall under the FCA's financial promotion rules. And in introducing this for something that is an unregulated investment, saying the promotion of it is now a regulated activity, has huge implications for the industry in not just the unregulated, but the regulated side of things. And this is what I really want to focus on, is when we move beyond that crypto side of things, we're moving directly into the sphere of financial regulation. And because any token that represents the fractional ownership of an asset or pool of assets, or provides the holder with any form of financial income, it is deemed to be a security token. And the key word here is security. A security token is treated by regulators around the world in the same context as stocks and shares, corporate bonds. There are very clear rules, very clear laws and regulations in almost every jurisdiction as to how securities can be promoted, subscribed for, and subsequently traded on secondary markets. And in particular, who can subscribe for them, who can buy them and sell them in the secondary markets. The ability to offer any form of secondary market or exchange facility for security tokens does fall in most jurisdictions under strict regulatory issues, requiring an OTC license, ATS license, MTF license, or a fully regulated listing exchange to be approved license. In particular, it should be noted that buyers and sellers have to become clients of a regulated brokerage, requiring them to pass the strict KYC and AML checks before they can trade. Unfortunately, the regulatory issues don't stop there. And indeed, one of the things that I wanted to touch on today was that it's vitally important to understand that there are, in different jurisdictions around the world, but in particular in the EU and the UK, specific rules surrounding what are referred to as collective investment schemes. And a lot of people aren't aware of this, but in the legislation in the UK and the EU is that any pooling of investment subscriptions for the purposes of investing those funds into one or more types of assets, be it stocks, bonds, or other forms of properties, clearly falls under the collective investment scheme legislation. What does this mean for token issuers? Well, if you're incorporated within the EU or UK or any jurisdiction that has collective investment scheme legislation, the situation is if you issue security tokens to fund property acquisition, and when I refer to property acquisition, I don't mean necessarily real estate property, it could be any asset class, you are likely to fall under this legislation, and as a result would need to be classified as a collective investment scheme and then fall under the auspices of a regulator in that jurisdiction. And there have been several companies that have already fallen foul of the FCA in the UK for operating unregulated collective investment schemes. The FCA love chasing after these people in the UK. I don't know about in continental Europe how strict they are about it, in enforcing it. But the FCA effectively force companies to cease activities and usually fine them. There are carve-outs from and exemptions from the collective investment scheme legislation, but it usually involves ceding day-to-day control of the decision-making process to the investors, which makes management and the benefit of establishing such an operation pretty much untenable for its creators. There are an awful lot more sort of nuances and details and legal proceedings to do with collective investment scheme legislation. However, in reality, what it comes down to is that most of the law firms we've been talking to are saying it's just not worth the risk. So in reality, what this means is that the most likely and most palatable option for most token issuers that are looking at having subscribers through issuing of security tokens to be able to acquire multiple assets within a sort of fund structure to actually incorporate outside of the jurisdictions I've been talking about. Beyond the collective investment scheme legislation, issuers of security tokens need to be aware how much how they promote the investment in their subscriptions and what exit strategy they're able to offer investors. Any form of public offer usually requires approval of a prospectus by a regulator, and this isn't just required for the country of incorporation, it's also required for any country that you are effectively, or jurisdiction that you are looking at offering the tokens in as a security token. In particular, it should be noted that within the European Union, if you are looking at promoting in several different countries within the EU, you have to have a prospectus approved for each of those countries. There is no blanket approval for the EU. So you have to go into each country, to each regulator and say, will you approve this prospectus? So it makes it a very expensive process. It makes it fraught with legislative and administrative issues in doing so. Additionally, one of the issues is how you offer an exit strategy. With real estate, if you're looking at real estate as an investment token that's being issued, it provides investors with a relatively stable asset-backed and hopefully generating income position. However, real estate itself is obviously relatively illiquid as an asset class and provides token holders with very little opportunity to exit without any form of secondary market. So I've really only sort of scratched on the surface of where we are with the regulation and what is to come. However, what I'd like to do is talk a little bit about Tokenize and what we're doing to overcome some of these issues that I've been talking about. At Tokenize, we are about to launch, we haven't launched yet, but we're looking at launching our regulated stock exchange that will be dedicated purely to security tokens. It encompasses a separate regulated brokerage platform for investors to be able to place orders to buy and sell. And we have our own central securities depository that's responsible for recording all the trades and obviously keeping an ultimate record of who the beneficial owners are within our blockchain solution. Not only does this supply companies with a secondary market for tokens, but we can offer the opportunity for a direct listing. And what this means is that companies issuing tokens where they already have assets within the company can have the tokens issued in treasury and can sell them through the secondary market direct to investors, and they can be retail investors because we are a fully listed market. It doesn't have to be pre-qualified as sophisticated or qualified high net worth investors or professional investors. Anyone can go in and buy the tokens in the secondary market as long as they are coming from a country where they are allowed to buy through a broker that is not necessarily regulated in their country. So for the US investors, one of the solutions we're looking at is acquiring a US broker to be able to provide that service. The whole process has been designed to reduce the administrative costs and the costs of joining the market. One of the other advantages when you're raising money as a company through Tokenize in primary issues, we will undertake the KYC and the AML checks on investors that are coming through, rather than the company having to be responsible for doing it themselves. Listed tokens themselves that we can list, they can represent shares, they can represent debt instruments, fractional ownership of assets, or, and this is one of the game changers that we're looking at, the tokens can represent a contract for future revenues or income. For a company with a specific asset, such as a royalty or anything like that, we can tokenize it. Investors can buy into a fractional ownership of the royalty or the income stream as part of a contract for future revenues. This is provides investors with a truly sort of pioneering and different investment proposition that just hasn't been available before. If you wanted to buy into a back catalogue of a music royalty, you had to buy the whole catalogue, and that would cost millions. Here we're saying you can own a fraction of that catalogue and you will get that fraction of the revenues that it's generating. Beyond the advantages of direct listings and secondary market trading, it needs to be understood that when a company is putting out an announcement through the regulated market, the benefit of a regulated market is that we are exempt from financial promotions. This means that once listed, companies can put out factual trading updates through our news distribution partner, who we're working with is PR Newswire, and can have these announcements picked up and redistributed through the likes of Bloomberg, Reuters, giving the company, the issuing company, a much wider global audience. At Tokenize, we've got a hugely experienced team from blockchain, exchange control systems, market regulation. We can operate in a number of jurisdictions, including the UK and the Caribbean, but we are also being put into the sandbox for Latin America through Mexico, and we are applying for an MTF license in Europe, in the EU as well. We are at the moment focused on getting tokenized offerings on our own platform. We are looking at working with how we have interoperability with other exchange and token providers to be able to incorporate that. But one of the advantages with having our own CSD is that we are operating a system whereby clearing and settlement of trades is instantaneous. There is no, it's made up at the end of the day. It is delivery versus payment. Our trading systems, which are operated through a company called GMEX, who are a worldwide supplier of trading systems to different exchanges, they are able to have systems that will check wallets to say, yes, that person has enough tokens to satisfy that trade. Likewise with cash held in the broker account, so that effectively you can't place an order unless you've got the cash or unless you've got the securities in there. This means that we are a long-only exchange. We don't allow shorting on our exchange, which we only view as a very positive position. So what's clear to me is that tokenization can fundamentally change the face of the global investment industry, but for it to succeed, it will need to embrace and be embraced by the regulatory industry around the world. And by thinking or trying to imply that security tokenization industry falls outside the current regulatory legislation will only cause regulators around the world to view it as the industry as a danger to investors and will reputationally damage all those involved in this very creative new world. I hope I've given people some food for thought, and thanks very much for your time.
Yeah, you absolutely have, Simon. Thank you so much for that. Very informative once again. Okay, so we don't have any time for questions right now. But yeah, let's jump to the last speaker of today, who is Kristaps Cuders, who's the co-founder and CEO of Coreestate. And Kristaps graduated from the Business Academy Aarhus program of innovation and entrepreneurship, and continued working as a business developer in various companies, meanwhile successfully building his own ventures. Vast experience in real estate investments, and his recent active fundness in crypto assets and blockchain technologies, along with reliable and diverse team members, allows him to lead this project. So yeah, Kristaps, the scene is yours.
Yeah, hello, Janus, thank you. I'm gonna start to share my screen. And so I hope you can see my screen and can hear me very well. Can you?
Yeah.
Okay, cool. Thanks. Hello, good morning, good evening, everyone. And thank you, DigiShares, for inviting me. Today, I will present and talk about our real estate tokenization project that we are working on here in Denmark, and what were and still are our challenges. I would say that it's my personal perspective as an entrepreneur. I am not a real estate developer, and also this case is more like when you develop a new project rather than tokenizing existing property. But first, I would like to introduce myself and our rental real estate project, Coreestate. So my name is Kristaps Cuders. I am CEO or Chief Vision Officer at Coreestate. I am an entrepreneur and a strong believer in DeFi and a decentralization in general, for the very simple reason that too much power leverage in one man's group organization, in my case, is a simple disaster, as we all know what's happening lately in the euro. And we are a proud DigiShares client. So what is our Coreestate? We have a vision to build a brand which has a potential to revolutionize the rental property industry into sustainable and affordable living for everyone. We believe that everyone should be able to afford housing, and our aim is to disturb the business model for rental properties with the help of blockchain and crypto assets. Or we could just say with the DigiShares platform in our case. So we are in the process of developing our first rental real estate property in Vejle, which will consist of 7 rental units. And the property is unique for its very attractive location and materials we use to build it. We will call our issued security tokens as a FRGD52, or as simple as a short version of the location by the houses. And for us, it was very important that our developed projects are in higher market value than the fundraised capital and the token sale, that our investors or token owners receive a higher value for the money they paid. So as you can see, the construction costs are 1.4 million approximately. We are fundraising through the token sale 1.5 million euros, and the ready property will be around 2 million euros. So how far are we? What have we done? And what our next steps are? We have purchased the land where the first property is going to be developed, sketched the project, and agreed on the construction schedule with the local municipality, and working together with the DigiShares to tokenize the property. And currently, we are at the private round before we go to the public one. I also like to mention a little bit about the team. So currently we are a team of 8 members covering architecture, IT, design, legal, and construction. And we have also skilled board advisors. One of them is Klaus, CEO of DigiShares, and Nikolai, who's our legal advisor here in Denmark. So let's go to challenges we faced when working on this project. So in general, there were and still are 4 challenges. As Simon before mentioned, there are legal challenges or regulations you have to fulfill. Of course, there are some financial challenges. There are still bias and also architectural. But we won't discuss the architectural today. Just a quick piece of advice. Don't start with the real estate, which is located where cities or the municipalities have a lot of rules and regulations. Thought, of course, it also means the property will be in higher value when you're going to develop it. So let's go down the details. What were the legal challenges for us? In Denmark, in order to tokenize the real estate, it should be owned by a public company, meaning that you have to establish a public company who purchased the property. This is a bit of time-consuming process in Denmark if you can't come up with a minimum of $60,000 in cash fund. Be sure, that's the kind of second, from the legal perspective, you have to be aware of that. Be sure that you are not seen as an alternative or any kind of investment fund where licenses are needed. Elsewise, you are risking getting a letter from your FSA saying that they see you as an operating fund without a license. This is the thing actually Simon before mentioned, that be sure what are FSA regulations when they see such a case or such a company operating in their market. And a distribution of tokens or digital shares, be sure to understand the underlying meaning of every share class of the public company. Because in general, meanings by issuing tokens, you're actually issuing a public company sales. You are selling the sales of a public company. And how we find out these or solve these challenges, one was we kind of starting a private round before the public round, and we will have a meeting with the Danish FSA to discuss whether we need license or not, and you should have an legal expert in your team. So let's move down to the financial challenges. As mentioned, be sure that the capital rise equal the value of an asset, that you are not overvaluating your property and raising capital where the underlying asset is actually maybe less worth than you're selling of the tokens. Be sure that there is a cash flow, because you will need to pay your staff, your establishing costs and legal. It is cheaper, but still, of course, you still need to cash to operate or start any business. And have a token distribution table, how much tokens or company shares you are selling in private round, public round, keeping to yourself, giving to staff. So be sure, like any other, this is maybe a little bit similar to utility tokens, just have a token distribution table or shared distribution table ready. And yeah, as for us, we don't get greedy. We do not overvalue the property. So we are actually issuing tokens for a less value than the property will sell or the underlying asset will be. And as a salary, as a remuneration, we give tokens to our partners. And the last but not least is the bias. You have to be aware that existing real estate investors won't understand your business model and might even see you as a threat. because you are entering their market, which is, they've been doing this business for years, and now somebody's coming and saying that they're gonna do it in different ways. So you will face some competition from them. And people also still rely and think it is a crypto project. So be sure that as our solution for this, we talk differently to various target audiences. Like for instance, to the crypto audience, we say it's a crypto project backed by the real physical asset. However, to the old school investors, we say that we use blockchain technology as a medium to record, store, and transfer fractional real estate ownership. So be sure that you know how to talk with a various target audience. That was my short introduction who we are, and thank you. And please follow up to Coreestate to do not miss the opportunity of owning the first tokenized rental real estate in Scandinavia, probably. And if you have any questions, you are welcome to contact me on LinkedIn, Twitter. Just write me down, and I will be happy to share more how it's going and how we are, and yeah, and what's the future of our project. Thank you, Jonas. I think I'm done.
Sounds good, Kristaps. Thank you very much. So you were the last presenter for today. Now we have the Fireside Chat. So yeah, if all of the presenters of today could join, that'd be great. Turn on your camera and unmute yourself. And then for the audience, if you have any questions you want the presenters to answer, just feel free to write it in the Q&A. Okay, let's see. Is everyone here? Great. Okay, so yeah, let's start out with some questions related to exchanges. First and foremost, I would like to know if some of these exchanges, are they primarily targeting accredited investors or retail investors, or maybe both? So Ryan, if you could start by yeah, covering that.
Yeah, definitely. Yeah, of course. So currently, all the securities that trade on the tZERO ATS are eligible for both non-accredited and accredited investors. If we had a product that, let's say, was a Reg D 506C that wanted to trade under an exemption for a 7, which solely limits trading to accredited investors, that's something that we can enable. And essentially what would happen is that any tZERO Markets user that would like to see that particular ticker would have to go through an accreditation process. So we use Verify Investor, which is a majority-owned subsidiary of tZERO, to provide that accreditation. So, long-winded answer is everything that's on the tZERO ATS is currently eligible for both non-accredited and accredited trading. But if there was a product that wanted to be or had to be solely limited to accredited investors, that's something that we can accommodate as well.
Great, thank you. And Leanne, maybe you can also talk a bit about Archax. Do you take the same approach?
Well, I guess in the primary markets, various regulators have different terminology. So I guess in our region, it's professional, and if you're deemed accredited or professional in the primary market, you may not be on our market. So how we operate is that those that want to be individual direct participants on the exchange have to pass both the quantitative and qualitative test to be an actual person as a member on the exchange, or institutions. However, retail can access our exchange through brokers. So we're actively out talking to brokers in all jurisdictions to be members of the exchange to onboard retail participants. Most of our issuers in our 50 large pipeline are only selling to professional opt-up or professional investors. However, we're seeing a change in that, and our brokerage will apply for its retail permission. So then the retail can go through our risk parameters of our brokerage arm. So yes, retail is a very important part of democratizing markets.
Makes sense. Makes sense. And yeah, maybe both Simon and Darius also can shed some light on that. So starting with Simon.
Yeah, sure. One of the things that we're very sort of conscious of is that we want to be fully inclusive. We are talking about taking assets, be it music royalties or being, say, a Picasso, and saying, look, we want Joe Average to be able to go out and buy $100 worth of a Picasso. So we are 100% focused on it being available for retail investors.
Great. And Darius?
Yep. For ADDX, currently our license allows us to onboard accredited and institutional investors. The accredited investors criteria is the Singapore criteria, which is a lot lower than some of the professional investor sort of criteria that you know, our international audience may be familiar with. So you can check that out on our website. In the longer term, of course, this idea of democratization is of course you know, the holy grail is to reach the last person. But right now, our target audience is accredited investors and institutional investors, and that would include, of course, B2B type entities, family offices, brokers, private banks, and so on. And in addition to individuals such as yourselves.
Great, thank you. And Simon, you also touched upon in your presentation that you were maybe in the future we're looking to build bridges between the exchanges, creating interoperability. And I would like to know from all of you, is that something you're looking into? Would it be siloed, or would it be an interoperable market, essentially?
Well, I mean, if I start, I mean, from our perspective, one of the things that we want to do is we want to have that interoperability. The issue we've got is that the trading system at the moment needs to be able to, because we don't allow shorting and it's delivery versus payment, we need to work out how the systems would effectively create that API feed for it to be able to check that we know the delivery versus payment is going to happen instantaneously, which is something that by offering it to other brokers and things like that, we haven't got that capability of building them in from day one, but we do. It is something we are wanting to work to for the future. Yes.
Great. And what about Leanne, Ryan? Do you have anything to add? Do you also look to create interoperability between?
Yeah, absolutely. I mentioned on our slide, we have a subsidiary that will eventually create that. But the challenge today is regulation in the different jurisdictions. So we have to have every token that is trading on our secondary venue custodied with us, not only because we're the only ones with the FCA permissions to have tokens trading on a secondary market, but you know, there's lots of developments to connect into the other custodians. But the one thing is that everything has to be registered into the CSD. Although, like some of the other exchanges, we have instant settlement, fully funded, we have a bank within our ecosystem, we cannot avoid this regulation. And what that means is that everything trading on our market has to be registered at the Central Securities Depository. And once they come off market, so if an investor buys it and they want to come out of Archax ecosystem and wants to take their token elsewhere, we have to deregister it at the Central Securities Depository. So to have that arbitrage opportunity of an issuance is trading on, say, Tokenize and us, we need to have that central area where it's digitally native, where we can keep track of where all the tokens are and have a central spot to manage that. And you know, we're tirelessly working on that and working with the regulators to make lots of change here in the UK. But today we have it, and we're building towards that in the future for sure. And having partners like the other exchanges on this panel is really important to us, because we all want to make this work, and working together is where we want to be.
Absolutely. Thank you.
If I could just add to what Leanne has just said there, Leanne's absolutely right. If you've got one central securities depository, it's very difficult to have it automatically traded on another. And in the old parlance, if you had a share that was in Crest and you wanted to have it listed on Frankfurt, you had to have the shares literally a broker that had a Crest account and a Clearstream account, and have the shares transferred from one to the other. And then in Crest, it would say this number of shares, 1 million shares or whatever, are now held within Clearstream. And we would have to work out how that would work within our own CSDs to have that level of transferability. But yes, it would have to come out of one and into another.
And can I just actually add to that? So because we have a custodian solution, we're able to create what we call depository interest. So we're able to list issuances from around the world and create what we call in the traditional world a depository interest. Because the traditional registrars who do that don't have the ability to custody security tokens, and we've been able to create our own depository interest and then hold a nominee account at Crest to really start automating. Again, it's baby steps and constantly thinking about how we can make change and working with the intermediaries to get to the ultimate end game, which is the interoperability.
Yeah, and the one thing I would add is that, yeah, we have an openness at tZERO as well to explore different connections potentially down the line with foreign exchanges. Likewise with bringing in the New York Stock Exchange's parent company, Intercontinental Exchange, as a lead investor in that strategic round. That's something that we're certainly exploring, but there are definitely regulatory nuances, including best execution, that'll just have to be, explored. But it's definitely an evolving market where, obviously, openness would be something that's, key.
Great, thank you. Then we also have a question relating to the blockchains that you use, whether it's permissioned or unpermissioned. And maybe, Kristaps, if we could start with you. I assume you go with a public blockchain, unpermissioned one. Which one are you using and why?
Well, we trust that with the DigiShares because they are the experts in this field, and we will do it on Ethereum blockchain as for now. We are aware that the gas fees are high at this time, but still it is the most recommended from DigiShares part. So we're not that much focusing actually on technical part of it. We leave it to DigiShares to take care of it. And we have our own business to do it. So that's our collaboration with them.
Yeah, absolutely. And what about the rest of you? Are there anyone of you who prefer a permissioned network to an unpermissioned one?
That'll be us. So ADDX runs on a private permission blockchain, not unlike some of the others, the major regulated exchanges, digital exchanges in Singapore. And the main reason for this is the ability to fit into the existing regulatory framework that exists in Singapore, right? Getting the Monetary Authority of Singapore comfortable with that. And once we get, off the starting block, which we already have, then obviously the thought process start kicking in on how we sort of bridge that into the main net and so on and so forth. But for now, we are on a private permission blockchain.
Okay, yeah. And I would assume for the rest of you have unpermissioned blockchains, or are there any one of you who prefer the permission ones?
What I would say is that for Archax, the blockchain stops in our custody solution. So we're agnostic to the blockchain. So issuers can issue in a number of blockchains. We take it in, we hold them in Archax nominee accounts, and then they stay in the custody solution, and then everything trades on our separate subsidiary in fiat currency. Now, certainly we want to make changes over time and have, as I said, in the post-trade space, everyone running nodes and blockchains being updated. But in terms of how we have to run the market to get institutional adoption, we feel that running a centralized exchange, definitely holding, multiple blockchain protocols within our custody is the way, the short to medium term way to go.
Thank you. Okay, so I also see there are lots of questions in the chat. Some of these are just mentioned were the ones submitted beforehand. But okay, let's start with Elsa, who's asking, Kristaps, can anyone participate in the private round?
Yeah, I'm not actually allowed to talk about it publicly since it's private round.
Okay.
We're not a public company yet, as we all aware. So please direct message to me on LinkedIn, anyone interested to hear more about our project. I will probably link my LinkedIn account on chat below.
Absolutely.
But yeah, we are open to talk about all investment rounds with everybody, of course.
Good to hear. Good to hear. Okay, then we have a question going out to all of you. From an LP's perspective, the liquidity is beneficial, but from a fund manager's operator's perspective, the liquidity could be detrimental in a downturn. For example, a temporary market-to-market, which publicly traded REITs saw at the beginning of COVID, which didn't affect private companies in the same way. How do you reconcile this? I don't know if any one of you have anything to add to that, if you could answer it. It's listed in the Q&A also.
I mean, I don't mind taking it. I can't comment specifically from Tokenize's point of view, because as I said, we're due to launch in the next month. But from having run previous exchanges out there, one of the things that I would say is, look, if you're going onto an exchange, you can't be a little bit pregnant. You're either pregnant or you're not. You are in a situation where once you're listed, if you are looking at an open and orderly market, the trading takes place. And I can remember when I was running head of markets at an exchange, I had a corporate advisor saying, please, can you suspend my client because the share price is tanking? And I said, no, this is the definition of an orderly market, is people have the right to buy and sell at whatever price they feel is the correct price on a downward market as well as on an upward market. And you've got to accept that it may not be in the interests of the company to have the market going against them, but that is the definition of an orderly market.
Yeah, and I would add to that is that when we first started out 3 or 4 years ago, we have a lot of small companies kind of putting almost the cart before the horse, wanting the secondary market. And, I'm not an advisor and we don't have advisory permissions, but just to all of this point, once you give the market the ability to value your company, anything that can happen in a macroeconomic way can affect that. So if you're a very early stage company, being exposed to central limit order book may not be the right thing. And these are why financial advisors have to advise you of the risks of being exposed to the markets. Now, there are liquidity events, like we can run bulletin boards like some of the others do, so that you can match buyers and sellers in a secondary market and you're not as exposed to those macroeconomics. But that's definitely something to consider when you want to be on a full-blown central limit order book.
Yeah, the way that ADDX manages that is from the product shelf selection perspective, right? So we'll onboard only sort of the brand name funds or bonds with sort of good issuers, and all these funds will have a NAV, right? And they have regular NAV reportings, and obviously if the price deviates too far from the NAV for whatever reason, then it presents an arbitrage opportunity, especially if the fund is an open-ended one. So I think that sort of keeps the market in an orderly fashion. And of course, for fixed income products, it's very obvious when something is over or underpriced. So I think the product selection also plays a part in speaking to the managing the issue that Jonas you mentioned.
Yeah, product selection I think is a huge part of it, and then on our ATS we require a minimum level of disclosure. So at a minimum, it's semi-annual and annual reporting. A lot of our issuers are opting to go above and beyond that minimum level per 152C11. Is the rule. So really that disclosure should provide some additional information to potential, buyers and existing owners of, the performance of that asset, whether it's a real estate asset, private company, et cetera, so they can make an educated, opinion on the, price of that particular security.
Makes sense. Thank you. Okay, and we also have a question here. There's one who's curious for a little more information on the tokenization of funds or companies. Will these funds or companies need to be domiciled where they are regulated as tokenized funds? Or can you tokenize a fund which is already in any jurisdiction? I don't know if anyone can answer that. Simon, do you have an answer to that?
From our perspective, we're happy that doesn't really matter where a fund or a company is established or incorporated. We can tokenize. We can look at listing the tokens that they're issuing and tokenize the offering. They don't have to incorporate So our exchange license is in Barbados. They don't have to incorporate in Barbados. However, they do have to register with the Barbados authorities as an external company, i.e. they have to provide all their details of incorporation and directors and things like that have to be registered at Barbados, but you don't re-register the company. It's just a register of they're an external company.
And I found a lot of the funds that we're talking about may have a traditional fund structure with a manager in one jurisdiction, the fund in another, and then they want to get into tokenization, so they want to add into the fund further subscriptions, and they create a tokenized feeder fund in a different jurisdiction. And all of these jurisdictions, as we said, have the regulations, so it's up to the fund to find the best regulation if they're, for example, wanting to raise subscriptions in the UK under the FCA that we can do, or to be listed on our exchange. But again, there's lots of different things you can do, and there's certain jurisdictions that are more open. For example, if your fund is in Cayman, but if you put it into Jersey, then there may not be as many restrictions. The feeder fund, that's tokenized. So yeah, there's lots of creative things that can be done, but you do really need to break it down and look at what the regulations are and what the best is for your fund, and where it's the manager is and where the fund is itself.
Absolutely. Okay, thank you for that. We also have a question here from Nara Yanan, who asks, how does the price discovery of tokens happen on the exchange? Do the exchanges work with market makers, or do market maker taker fees differ from tokens to token on a particular exchange? I don't know, Darius, would you want to answer that one?
Yeah, right now, the market is the prevailing last done from willing buyers and willing sellers, right? We do have the capability to onboard market makers right now. So we have the full suite of market maker APIs ready to go. That said, we do not have any market makers yet, because the types of products that we have onboarded so far are not the types of products that market makers necessarily would latch onto, right? So we have funds and we have fixed income products, but as we onboard more and more equity type products, then we should see more of these types of entities coming onto the fore.
We are about to launch, we're onboarding our first issuers, but we are in talks with market makers. It's very difficult when you're this, with a lot of SMEs, and we're an SME growth market, are there to get the big market makers to participate in illiquid markets tends to be a distraction. However, and also on the cryptocurrency, it's a very different scenario. So we have found a couple of market makers based here in London, actually, that really, they're in the cryptocurrency, but really want to get into market making and security tokens, have the rights, regulations, because that's obviously important. So they'll be working with our first issuers to make markets when we launch, which is really exciting, because this is one of the biggest challenges, as we all know.
Thank you. And Ryan, Simon, any of you planning on introducing market makers?
So with Tokenize, one of the things that we're looking at is what you would refer to as a market maker on the continent rather than a market maker in the UK. The prices that we will be displaying will be the last traded price or the opening price on there, with an open order book on the buy and the sell side, and we've already had discussions with a market maker that wants to make a market, but they are more a liquidity provider rather than a market maker. They will not be setting the price at which people buy and sell in a traditional UK focused market, where if you're a buyer, you trade against the market maker, and if you're a seller, you trade against the market maker, and they'll charge one price over here, one price over there, and everything between those prices is their profit. The liquidity provider is there to provide liquidity rather than set the price of the transaction. It's always last traded price.
And we currently operate an order book system as well, and then we're looking into market makers in the future. So I think it's a very similar status to a lot of the other trading venues here.
Thank you. And then I think we're going to take one last question from Gilles. When will we see institutional solutions being launched? I don't know if there's anyone who wants to address that one.
I'll take that. And the answer to this is we already have institutional solutions. ADDX has B2B and B2B2C clients in the form of, likes of private banks, brokers, wealth managers, asset managers, and so on. We operate solutions such as master sub account structures, LPOA for external asset manager structures, omnibus account structures, and we've executed on all of these with partners across Asia. So any of those in the audience who are represent institutions who want to work with regulated exchange in Asia, feel free to connect with me. I'll put my email in the chat.
Sounds great. Okay, so if none of you have anything to add, I think we're gonna end it here. But yeah, thank you so much for attending today. Thank you to all our great panelists and presenters. It was really insightful presentations and the answers you gave. So very much appreciated. And yeah, to the audience, if you have any questions that you didn't get answered, I believe most of today's presenters can be found on social media, LinkedIn, Twitter, something like that. So yeah, you can try to reach out to them. Lastly, I just want to say thank you to all who attended the webinar, you, the audience, and also thank you to our great tech team and moderators who helped making this webinar. And yeah, hopefully we'll get to see all of you again for the next webinar where we'll discuss tokenization and global regulations. So yeah, see you all soon.